if we went from the high level of the Dow right now down to 5,000 for an example, thought experiment. David, it's never going to happen. I'm not that bold. I don't know the future. And gold made it to 5,000. Well, that would be a very interesting place to contemplate because many of us, many in our peer group talk about the gold to Dow ratio. And when the gold to Dow ratio hits 1, that's a pretty good sign that we've hit a top in the gold market, or conversely, a bottom of the stock market. With all that aside, you have to stay realistic. And, to put a number out there of, 600 or 1,000 or whatever for silver, you can do whatever you want. I'm free market. That's free market thinking. And maybe in terms of how much the currency's depreciated, that would be the real price.
Silver just took a hit, no question. After weeks of building momentum, the white metal broke below key technical support, with futures traders bailing fast. Silver prices dropped sharply, hitting a 4-week low, while gold also slipped modestly on profit-taking. And some of that pressure? It's likely coming from the copper market, which just saw a full-blown meltdown over the past 2 days. When industrial metals take a hit, the ripple effects spread fast, and silver gets caught in the crossfire. David Morgan of the Morgan Report isn't shocked. He says the silver market, manipulated as it may be, still moves with technicals, and we need to stay grounded. Yes, people throw out wild numbers. $600 silver, $1,000 silver. And while hyperinflation could theoretically get you there, that's not where we are right now. Morgan's been calling this pretty accurately. When gold spiked to $3,500, he warned we were entering a summer trading range, and that's exactly what played out. He recommends rotating into platinum or silver at the time, both of which moved higher while gold flattened. But now, he sees a topping process in those metals as well, with consolidation likely to continue through August, possibly longer. The broader takeaway? This pullback doesn't kill the bull market, it reinforces it. Gold, silver, and the rest of the complex aren't supposed to go parabolic forever. Healthy markets move in steps. Build a base, climb, cool off, repeat. That's what we're seeing now. Silver's recent outperformance still matters. Since April's close, silver has gained nearly 11%, even after the latest drop. It's moved independently of gold, which has had a choppy July marked by short-term recoveries and longer-term uncertainty. Morgan points out that gold often finds a seasonal bottom in August. September brings volume back into the market, so don't be surprised if metals continue to chop sideways for a while. If anything, this is what the market needs to reset before the next leg higher. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Well, I think a lot of, I know, my people that follow me, whether they're, paid members or not, I mean, they look at, some of us that have a pretty good track record for guidance. I wouldn't say, I don't have a crystal ball. I certainly have made some good calls. I've made some errors, but I think that you got to be objective in this business. It's hard because there's so much emotion around money to begin with, let alone sound money and the argument for, truth in the financial system, which is rare. But with all that aside, you have to stay realistic. And, to put a number out there of, 600 or 1,000 or whatever for silver, you can do whatever you want. I'm free market. That's free market thinking. And maybe in terms of how much the currency's depreciated, that would be the real price. But the market knows more than anybody. And yeah, the market is manipulated. It has been proven, but I don't want to go down that path right now. What I want to do is reiterate what you said, Elijah. And that is, what really got me more solidified as I'll call myself a gold bug. I don't really consider myself that, but I'll use that moniker, was The Invisible Crash by James Dines, one of the first books I read on hard money. And what he pointed out was that the stock market keeps making larger and larger numbers, but in terms of gold, is actually going down. And that's a real eye-opener. And I said that on your father's last time your dad interviewed me. And I really enjoyed, speaking that. And he actually wrote me back, saying, David, I'm not seeing that. The AI is not telling me that. So I got a chart for him and I sent it to him. I said, well, there you go. There's the proof. But this is part of the manipulation is, it's, I won't say it's mind control, but it's propaganda, because if you have a constant, gold's a constant, then that measures everything. And a dollar is not a constant. In fact, what is the price of gold? It's just showing you the depreciation of the dollar or the paper currency versus something that is constant, and that's a gold. And so, again, I'm glad we're having this discussion, because I think it's a good fundamental place or a foundational point that people need to kind of redigest, perhaps, speaking for myself, get a better handle on what do I really want to focus on? Do I want to focus on $10,000 gold, or do I want to focus on where is the economy? What does it buy? How valuable is it? Heck, if we're buying houses, as Andy said, for this, a good price vis-a-vis gold, and let's say you could buy 2 houses for that same amount of gold. Hey, wake up and see the light. Gold's probably overpriced. Holding, precious metals, something I've advocated since before I began on the internet. But it's part of your portfolio. In other words, that's my specialty. That's what I advocate, and I'll give you the reasons why. But really, if we want to benefit, that paradox of, a win-win situation where your investments are helping you have a better lifestyle, and at the same time, what you invested in is also helping society with a better lifestyle, or cleaner air, better water, better food, easier way of doing things, better communications, whatever it is. That's the paradox. You can, as a true capitalist, you can benefit yourself and society at large. And that's largely what I want to be on. I want to be on that where we're helping each other with, our, let's say, wise choices with what we invest in. However, when you get in a distorted situation like we've been in for many decades now, and really it happened before August 15th, 1971, when Nixon closed the gold window, because we were lying before then, and that's why he closed the gold window. We said the dollar's as good as gold, but it hadn't been for a long time. Basically got caught and said, I got to stop that contract. I'm closing the gold window, as we refer to it. So the point is, we've got to come back to those basics. And you're right, there will be a time. Now, from my perspective right now, I think we're still going toward a system that's being pushed or propagandized, if that's a word, into a system of more control, not less. And the more freedom the people have with their money, the more freedom we have overall. And the more control the bankers have of the money, the more control they have overall. So I think we're at a nexus where there's a lot of people like you that have dedicated your life since, I think, age 16. I've done it most of my life to get the ideology out that, there is a direct correlation between free market economics and freedom versus some other system that really controls the system. And so we are at a very interesting point in history, but I'm just going to circle back and say you're correct. There will be a new one. And it's not necessarily the one that we have been taught about, and I've talked about the CBDCs or a private version of the CBDC. I think that is the push. I think that's what they want. I've talked about it. I've been consistent about it. But I also hopefully have said it enough that just because that's what they want does not mean that's what's going to take.
Right now, gold is in a classic standoff. David Morgan says it plainly, gold's in a trading range. Bulls push it up by $100, bears drag it right back down. Neither side is winning. This is what indecision looks like, and it is evident on the chart. But beneath the surface, there's a deeper story unfolding. One of the most revealing signals currently is the divergence between spot gold and gold futures about their 100-day moving averages. Spot prices are still holding above the 100-day SMA, that's the line bulls are defending. But futures? They're sitting below that same threshold. That kind of split matters. It suggests that short-term optimism may be masking structural weaknesses. There's another clue in the monthly candles. They're showing long upper wicks. Gold hits new highs, then fails to hold them. These wicks aren't just noise. They reflect a market that wants to move higher, but isn't ready yet. It's testing the ceiling, but without enough conviction to break through and stay there. Still, Morgan isn't bearish, far from it. He points out that gold has already broken the $2,000 barrier and surged to $3,500. That kind of move doesn't happen in a weak market, but the next stage, from $3,500 to $4,000 and beyond, won't come in a straight line. It needs a base, a period of consolidation, and that's precisely what we're getting now. His longer-term view? $4,000 is still in play. $5,000 is possible. But timing it isn't about hype, it's about watching how that base builds. Gold's recent consolidation isn't the end of the story, it's the middle. Let's get back to the interview.
The tariff situation is like playing 21 at Las Vegas. You could keep rolling the dice over and over and coming up with a different number. But on the basis of what you asked me, yeah, I think there's a little more stability, a little more reconciling what these tariffs are really going to look like, and a little more solidity to the proposition that, here's what we're going to do, and you can kind of like depend on that. So yeah, I think markets hate instability. They hate the unknown. So even though tariffs might not be suitable to the counterparty that has to pay them, once they are established and consistent, and they know what they're going to be for some, time frame, then the market can kind of, take that in and work with it. Yeah, I think we're at again, that trading range, and that's what I call an indecision pattern. It's kind of equal bulls and equal bears. No one's really winning. The bears win and the market goes down $100. The bulls win and it goes up $100. I'm referring to gold. And that means that just what I said. So what's going to take it to 4,000? Well, the bulls have to win. There has to be more buying pressure than selling pressure. What would cause that? Well, there's a number of things, but most are out there already. The war situation, Middle East, Ukraine hasn't gone away, flare-ups in Pakistan that have cooled off. So all of those things that are really favorable to an increase in gold prices are already there and pretty well known. So what's going to take it to the next level? And that would probably be something in the financial sphere where we have, let's say another bond auction and no one shows up, as an example, where, yields are actually forced higher because demand is nothing. So to sweeten the deal, prices, their yield gets pushed higher. And that's just an idea. I'm not saying that's going to happen. I'm just giving you an example. But I am still of the mindset that it will get there, but maybe not as easily as we went from the 2000 level, which we finally broke through and hit, 3,500 pretty quickly. I think we're going to need to kind of work this base and then go higher. $500 more is a nice move, but nothing like the $1,500 that we saw from the 2000 level. Eventually, I think we're going to see even higher than 4,000, but I'm writing a report right now, and, depending on the overall global economic climate and what happens in the, I would say, non-reality, the stock market indexes. There's a gentleman that most of our viewers would probably be familiar with, Charles Nenner. And Nenner is very, very bold in his predictions, but he's also very accurate. And for an example, if we went from the high level of the Dow right now down to 5,000, for an example, thought experiment, David, it's never going to happen. I'm not that bold. I don't know the future. And gold made it to 5,000. Well, that would be a very interesting place to contemplate because many in our peer group talk about the gold to Dow ratio. And when the gold to Dow ratio hits 1, that's a pretty good sign that we've hit a top in the gold market, or conversely, a bottom of the stock market. I'm not saying that's going to happen. What I'm trying to convey, and I want to convey very strongly, is that the price of gold is what most everyone focuses on. Really, you want the value of gold. And this is something that Mike Maloney does very well. He talks about how much of a house do you get for an ounce of gold? How many barrels of oil? How many bushels of wheat? How much of the Dow Jones Industrial Average? And so if you thought about, let's say, a contraction in the economy and the housing prices came down nationwide, we just use the U.S. for an example, let's say 1/3, but gold went up by that $2,000 or $1,500 from 3,500 to 5,000. So you got that increase in gold, and you got a decrease in the housing market, or maybe the bond market, or the stock market, or the automobile market, which is suffering badly. So you have to look at it in terms of what do I get for that. So it's not always a function of price. That's what we're taught to think, and we think prices all the time, but really I think a better and more accurate measure is to look at what it buys in terms of other hard assets. Pretty inspired here the last couple of months. I mean, it was the 4th of July, and I was, I guess I was riding myself fairly hard, meaning that, what have I accomplished what I've wanted to achieve, which is to educate people enough for them to make up their own darn mind whether or not the system that we have is one that they would have chosen freely or not. And so I wrote that piece about, money and on the 4th of July, money and freedom, basically. And then I was inspired again to talk about, how much our faith, from my perspective, has been diminished over the last few decades. And where's the faith now? And the faith it's not in God, it's in the other God. And what's that? Primarily it's money. And so I just took off on that theme and thought, what does it really do? And so when you put your faith in, let's say, a false idol, then it revolves around value. And the propaganda is extremely good at this. I'm writing about it in the Morgan Report this month about the U.S. economy runs 70% on the consumer. That's kind of ridiculous, but that's our economy. And so we look for things outside of ourselves. So you've heard me say this before, Elijah, but always look for what you have, not what you have. And what I mean by that statement, I look for what you have as an individual as far as your integrity, your character, your moral values, your worldview, what you bring to the game rather than what you can get from it. That's your internal self. That's your relationship with whatever higher power you want to believe in or not. But it's your integrity. It's your authentic self. And what we're taught is what you have, which is everything external to you. You know, what kind of car do you have, what kind of house, what kind of yacht, who are your friends, what's your selfie look like, what's your social media profile look like, what kind of meals do you have. I mean, people take pictures of their meals and put it on social media. I mean, I'm not going to, if I'm free market, you're free to do that. And you are. To me, it's, it's a little interesting, you know, but this is the society we have. So we're looking outside of ourselves for that fulfillment, which you'll never get. You're going to get it from the heart outward. It's how big a heart do you have? I mean, some of the greatest stories ever told have to do with the underdog that has a big heart and is able to overcome all kinds of obstacles and move forward. So hopefully that's summarized it in a way that people can understand what my true meaning was in that piece, because I've seen it happen more and more as I've gotten older and older. And I'm just calling them as I see them. And you'll find as you get older, Elijah, I know you're still, quite young, at least relative to me, but you will, or I will speak for myself, but you get a little more crotchety, which means a little more edgy, and you're more prone to speak out a little harsher maybe than you were in the past because, the political correctness waning more and more also.
Choppy action across precious metals isn't a signal of weakness. It's a recalibration. Silver got ahead of itself and corrected, dragged down in part by the chaos in industrial metals. Gold, meanwhile, is stuck in a tug-of-war between bullish momentum and broader uncertainty. The charts show hesitation, not collapse. What we're looking at is a market that surged hard, hit resistance, and now needs to cool off before the next push. Patterns like this often precede bigger breakouts, especially when underlying fundamentals, like debt, inflation, and currency stress, haven't gone away. When prices stall but long-term pressure continues to build, how long can the lid hold before metals make their next decisive move? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.